stocks grapple with their worst two-day slump of 2013. The outlook for an end to the Fed's bond buying program, technical pullback, and a surprise miss in the February Philly Fed Index are all blamed for today's continued sell-off. This is the MacDesk Flow Report for Thursday, February 21st. I'm Rebecca Darsh from the Market Access Center, speaking to you from the floor of the New York Stock Exchange as the Dow Blue Chips trade 79 points lower. That's down 12 points in the S&P. It's officially setting us up for the worst two-day performance for equities year to date. Commodities are soft once again today, with crude oil seeing its biggest two-day decline in 3 months. Let's recap the action overnight. Again, market participants had plenty to chew on after a sell-off yesterday that took 60% of the S&P down more than 1%, with market weakness particularly pronounced in industrial commodities and precious metals. Asian stocks closed broadly lower on follow-through from the U.S., while weaker than expected PMI readings from France and Germany added to the malaise in Europe. Here in the U.S. pre-market, weekly initial jobless claims came in at 362,000, which was a little higher than the market had expected, while January's CPI came in flat, which was a little bit cooler than street expectation. Again, investors have been parsing the content of yesterday's Fed minutes, which were a little more hawkish than many expected to see, showing several Fed members concerned about the costs versus the benefits of continued long-term quantitative easing. And this took a bit of risk appetite out of the equity market. Stocks took another hit on this morning's surprise miss in the Philadelphia Fed Index for February. After a prior reading of minus 5.8, analysts were looking for a return to positive territory and a reading of 1.0. Instead, the February read came in at minus 12.5, showing a contraction in regional manufacturing activity. The VIX is sharply higher for a second straight day, up better than 7% and reading just below the 16 level. In the options market, we've been seeing large-size buyers of option premium, specifically in long-dated, deep out-of-the-money calls in several gold mining companies. Again, gold bugs using the pullback in precious metals to go all in on exposure to the miners, as well as in near-term puts on the long end of the Treasury bond yield curve, where traders have been building positions in the April contract over the past few sessions. Let's take a look at what's on tap for next week. On Monday, a light day for data releases, but we will continue to watch the manufacturing index reads from several regional Feds. The January Chicago Fed and February Dallas Fed readings are due out on Monday, along with earnings from Berkshire Hathaway, Lowe's, and Quicksilver Resources. On Tuesday, we'll be watching Japan's February small business confidence and a number of key U.S. data releases. The S&P Case-Shiller Home Price Index for December will be released, along with January new home sales, the February Richmond Fed Manufacturing Index, and consumer confidence, and earnings from Macy's, Home Depot, Tenet Healthcare, Radio Shack, and Metro PCS. On Wednesday, Japan will release January retail trade numbers and sales data from its large retailers. We've also got a string of February consumer confidence numbers from Europe, along with the preliminary read on Q4 economic growth out of the UK. U.S. data releases include January durable goods and pending home sales, and we'll be looking at a heavy day of retail earnings from Target, Limited Brands, JCPenney, Groupon, and Heinz. Thursday brings January housing starts and construction orders from Japan and a string of regional CPI readings from Germany. U.S. pre-market will take its cues from weekly initial jobless claims and the second read on Q4 GDP, along with February Chicago PMI and Kansas City Fed Index readings. And earnings reports will be out from Iron Mountain, Western Refining, Sotheby's, and more retailers, specifically Sears Holdings, Kohl's, Gap, and Best Buy. Then on Friday, it's March 1st, if you can believe it, we will get things started with China's February manufacturing PMI. This will be an interesting number to watch. Japan's January jobless rate and some CPI data will be out as well as January retail sales from Germany and several European PMI reads for the month of February. U.S. data and earnings releases will be thin on the ground next Friday, with only Vanguard Natural Resources and Big Lots due to report. We'll be watching all the action unfold from here on the floor, so be sure to check your inbox for the midday, and be sure to check us out again next Thursday for the MacDesk Floor Report.